Have you been captivated by the recent Palantir stock rally and dips? The market's rollercoaster ride can be terrifying but presents unique challenges for investors. In a volatile market, emotions run high, greed takes hold, and fear of missing out lingers. But amidst this chaos, there's a better way to approach investing in Palantir. Let's delve into strategies that can help you navigate this turbulent market and make informed decisions that lead to long-term success. Get ready to unlock the secrets of investing in Palantir amidst the twists and turns of a volatile market. Before we do that, let's quickly see how Palantir stocks performed the past few days. Palantir had a great day on Tuesday, June 27, 2023, as its stock price went up by 4.81% and closed at $14.61. Palantir is part of the technology sector in the software infrastructure industry, which is very hot and trendy right now. It has a market value of $32.23 billion, that's a billion with a B, and 2.11 billion shares out there, that's a lot of shares. Palantir stocks are bouncing back from a low point. Palantir had some rough times in the market before, but it seems to be recovering now. It lost 150.17% of its value in the last 52 weeks, that's brutal, but it gained 13.79% in the last 30 days, that's impressive. It also went up by 81.72% in the last quarter and 131.17% in the last 6 months. The company's performance is now positive at 127.57% from the beginning of the year. Let's take a quick look at Palantir's past and future growth using the EPS growth. EPS growth is a measure of how much the company's earnings per share have changed over time. The company posted a value of $33.10% as earning per share over the last full year, which is pretty good. It also has a chance to post $17.92% for the coming year, which is even better. If we look at the long-term EPS growth, the outcome was 0 for the past 5 years, which is not so good, but the current prediction is 73% for the next 5 years, which is very good. Price to sales ratio, price to earnings ratio, price to cash and price to book ratio, SMA 50, and SMA 200. These are some ratios that help us evaluate how much the company is worth and how well it is doing financially. The price to sales ratio tells us how much we are paying for each dollar of sales. The price to earnings ratio tells us how much we pay for each earnings dollar. The price to cash flow ratio tells us how much we are paying for each dollar of cash flow. The price to book ratio tells us how much we are paying for each dollar of book value. As of now, Palantir has PS, PE and PB values of $16.24, $0 and $11.33, respectively. These values are quite high compared to the industry average, which means that the stock is expensive or overvalued. But this could also mean that investors are expecting high growth from the company in the future. Its P/cash is valued at 11.10, which is also high compared to the industry average. This means that the company has a lot of cash flow relative to its stock price. Investors also look at the company's profitability ratios to see how well it is using its resources to generate profits. Return on equity ratio, or ROE, is an important indicator for investors as it shows how much profit the company makes for each dollar of equity. Volatility Insights Volatility is a measure of how much the stock price changes over time. It can help us understand how risky or uncertain the stock is. Looking at some historical volatility numbers on shares of Palantir, we can see that the 30 days volatility is currently 7.23%. The 7 days volatility is 5.62%. These numbers tell us that the stock price moves up or down by about 7% or 6% on average in a month or a week. The company has a beta of Palantir Technologies Incorporated. 1.00 indicates that its price moves in sync with the market. A beta less than 1.00 shows less volatility than the market. A beta greater than 1.00 shows more volatility than the market. Now, let's address a critical aspect of investing that can make or break your success. Picture this: a market flooded with emotions, rampant greed, and the overwhelming fear of missing out on the next big thing. In such an environment, letting emotions dictate investment decisions is easy. But here's the truth, my friend: emotions and investing are like oil and water, they don't mix. When emotions take the wheel, rationality and sound judgment take a back seat. Greed clouds your vision, making you chase quick gains without considering the long-term consequences. FOMO, that insidious fear of missing out, pushes you to jump into investments without proper research or understanding. It's a dangerous game to play, and more often than not, it leads to devastating losses. Think of it this way: when you bring emotions to investing, it's like bringing a knife to a machine gun fight. You're setting yourself up for a world of pain and financial turmoil. Emotions distort your perception, making you vulnerable to market fluctuations and hypes that can quickly fade away. Moreover, having a well-defined system and unwavering commitment to it holds immense significance when investing, particularly in the case of Palantir. This system revolves around process, data, discipline, and trust. You must establish a straightforward process that guides your investment decisions. This involves outlining specific rules and criteria for selecting and managing investments. And by following a defined process, you can avoid impulsive decisions driven by emotions and instead make objective choices based on predetermined factors. Data plays a crucial role in this system. You must gather and analyze relevant information, such as Palantir's financials, industry trends, and competitive landscape. You can make well-informed investment decisions through data-driven insights and assess Palantir's potential for long-term success. Discipline is essential in adhering to the established system. It requires investors to stay committed to their investment strategy, even during market volatility or short-term fluctuations in Palantir's stock price. And by maintaining discipline, you can avoid reactionary behavior and stay focused on your long-term goals. Lastly, trust is a critical element of this system. You must trust the process you have developed and the research you have conducted. Trust lets you stay confident in your decisions, even when faced with challenges or temporary setbacks. It fosters a long-term perspective and prevents knee-jerk reactions based on short-term market movements. Now, the dollar-cost averaging or DCA strategy emerges as a powerful approach to investing, and it holds particular relevance when considering Palantir. DCA involves consistently investing a fixed amount of money regularly, irrespective of the market's ups and downs. It is a simple yet effective method that helps reduce the impact of market volatility and eliminates the need to time the market perfectly. By implementing DCA, investors commit to investing a specific amount, say $100, into Palantir regularly. Whether the stock price is high or low, they continue with this fixed investment amount. When the market experiences a downturn, they purchase more shares at a lower price. Conversely, you acquire fewer shares at a higher price during market upswings. This consistent and disciplined approach shields investors from the unpredictable nature of short-term market fluctuations. The beauty of DCA lies in its ability to remove the burden of trying to time the market. Instead of fretting about finding the perfect moment to buy Palantir stock, investors focus on the company's long-term growth potential. With each regular investment, they build a position in Palantir over time, benefiting from the potential appreciation of the stock as the company progresses. This strategy not only helps to mitigate the risk of making poor timing decisions, but also allows investors to take advantage of market downturns. By purchasing more shares when prices are lower, DCA enables investors to lower their average cost per share. Over time, as Palantir's stock price increases, the overall value of its investment has the potential to grow. But before we continue, we want to thank you for watching this far. Another crucial aspect of successful investing lies in conducting thorough research and analysis to identify companies with significant long-term potential. This principle holds particular importance when considering Palantir. Investors are encouraged to search for companies that have the potential to dominate their respective industries over the next 10 to 20 years. By diving into detailed research and analysis, investors can gain insights into a company's fundamentals, market position, competitive advantages, and growth prospects. With Palantir, it becomes essential to understand the company's unique data analytics capabilities and its potential to revolutionize industries such as government, healthcare, and finance. Investors should look for indications that Palantir possesses the qualities necessary to become a market leader, such as innovative technology, a solid customer base, strategic partnerships, and a track record of delivering results. By identifying these traits, investors can gain confidence in Palantir's potential for long-term success and consider it a suitable investment opportunity. So, a study was conducted to examine the behavior of 3 types of investors in the market. The first type is the investor who stops investing during market dips, while the second type consistently invests regardless of market conditions. The third type is the investor, who doubles down on investments during market dips. The study analyzed the returns of these three investor types over a specific period. The results showed that the consistently invested investors outperformed the other two types. And by staying the course and maintaining their investment strategy, they could capitalize on their investment's long-term growth potential. So, to succeed in investing, investors must have unwavering conviction in their chosen investments, like Palantir, based on thorough research and analysis. Investors can build a robust long-term investment strategy by focusing on stocks they believe in. Additionally, considering a systematic approach, such as dollar-cost averaging, can be beneficial when investing in Palantir. This disciplined method ensures consistent investment over time, reducing the impact of market volatility and increasing the potential for long-term growth. So, are you ready to invest in Palantir? Share your thoughts in the comments section below. And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, I highly recommend watching this fantastic video if you want to know about Palantir's stock analysis. Click this video right here and enjoy. Thank you for tuning in and stay tuned for more exciting content in the future.